rich and famous. Hey. On YouTube.
All right, welcome back, folks, to the Short Vol Show Live. My name is David Lincoln, and you can see part of my green screen sneaking into the corner over there. Let's see if we can hide that, maybe. There, that's a little better. After 2 weeks of not being able to do any wrong, I'm finally, I knew that wouldn't last, and I seem to be losing as we come into today. I did end up putting a position on KOLD on, as you can see in the name of this video, and it hasn't been working out so far. Now this isn't really surprising to me, as I did essentially get long natural gas when it's in a big downtrend here. Now, however, it's been a downtrend for a while, and it can only go to 0, and it's come from 10 down to 2. So I'm feeling that there's got to be some pressure at some point. There's got to be some support here somewhere, right? It did get down to 194 a couple weeks ago, and it's threatening to break through 2 right now, natural gas. Meanwhile, the implications for KOLD, which is the thing I shorted, it's kissing $75 right now. I did buy the 30 puts in November, so more than 50% out of the money puts in November. But there's 241 something days to go, and so I've got plenty of time on them. And this thing is decaying. However, we will need some sort of rally for these to work for us. Going forward, let's take a look at some charts real quick, and then we can move on to the VIX and VIX products. All right, so let's go to the chart. Here we are. This is natural gas. If we can kind of go to the minute by minute. Oh, it looks like we've rallied a little bit coming as we approach the open here in the markets. Now, the open in the stock markets is kind of irrelevant to natural gas. This is trading pretty much 24 hours a day. We did get down to 202 earlier today around 7 o'clock, but we've come back now. We're up around 208, it says. So this is basically, I think this gets marked on the day every morning. Maybe at 9 o'clock is when the day gets marked, something like that. But either way, KOLD is higher than where it closed yesterday. KOLD closed yesterday at 71.29, as you can see from the screen, and it's up about $1 from there. So that's not good for us. But natural gas appears to be hanging in there for the moment. And when we do look at the chart, we can see that it's just really come down by miles from where it was. Here's a 3-year, and you can see just this huge thing up in July of this summer, up to 10, and then now we're back down, kissing $2. And I feel like between now and November, there has to be some sort of turnaround here. Nothing has to happen, but I feel like it's a good bet that there could be a turnaround. Let's go to this, to a bigger chart. I don't want 20 years. I guess I'm going to make a custom chart here. So let's do a custom time frame. Let's do 5 years, a month at a time, just to kind of zoom out a little bit here. And here's the story. You can see it hanging out, the all-time low, 144 back in 2000, in the 2000s. 2020. And before that, you can see it's been in this range from, 144 down up through $10. So two even is pretty low in that range, right? So that's kind of my whole thought process, and it's I suppose an amateurish thought process. However, that's what I'm going with here. And I don't need a huge up move in this to make some money and take this position off, but I did put this position on yesterday, and I was the only open interest. There was one open interest in this strike, and pretty much in this month before I traded it. So that is really a downside with this. Somebody else jumped on this trade with me and bought some puts as well. I'm not sure if that's someone who saw me on YouTube or just randomly jumped in there, but somebody else jumped in there with me. So we'll see what happens. these puts were pretty much $6 with this a little bit lower. So we'll see from here. I think they'll hold up pretty well because there's plenty of time to go. I guess I was wrong in the days. 234 days to go. I am up money on the year on this one, but we'll see how long that lasts for. So what I would be looking to do is, I basically have $6,000 worth of puts here, right? I've got 12 of these. So what I'd be looking to do is, if we do get some sort of down move in cold here, sell something against them, right? We've got 25 a day in decay. That doesn't sound like much, but I would like to cover, or 20, now it's $30 a day in decay. I would like to cover that. It's showing me short, basically 100 deltas here. So we make $100 if this goes down $1. We lose $100 if it goes up. Now, this is kind of inaccurate, right? Because these puts are way out of the money. So any delta you attach to them is what we would call a soft delta, right? A hard delta would be something where the puts are in the money or very close to at the money. So if these were like the 74 puts or the 100 puts, that's a hard delta, right? That's you're pretty sure that's going to be accurate. But when you've got way out of the money puts or way out of the money calls, it's a soft delta, right? These things are going out worthless in 234 days. So however close we get to that strike is kind of a guesstimate, right? If we do try to look at the Analyze tab here, if we do move this down to, well, it's showing down around $59, it's attaching 136 deltas to these puts. So obviously the closer we get to strike, the more we go down, the more delta this is going to attach to these puts. Meanwhile, Squarespace position's been working. I have that in 401k. If we look at VXX, it's up a little bit today, but it gave back another $2 yesterday. So I think VXX, if you're still short VXX, or if you have a short on, I think it's going to work pretty well at moving forward here. Let's see if we can pull up VIX Central for a second here. And put that on the screen. All right, and so we can see the term structure looking what I would call pretty healthy. So 3% contango, you can multiply that by 12 to get annualized, but that's a decent amount of decay. Spot, the roll yield, or the difference between where spot is and the front month future is $1.45, which is, I'd say that's kind of average. Kind of varies. It will get less than that as we get closer to expiration. Remember, we're 3 weeks away from expiration, so the meat of this VXX, UVIX, etc., is based on that front week future that's trading 22.45. But looking healthy for a rally, the VIX term structure from here. We don't know what's going to happen moving forward. First Republic was way bid up yesterday on the open. Now it's kind of in between where it closed 2 sessions ago and where it opened yesterday. So I don't have much faith in First Republic. I think it could start creeping lower again pretty easily. I was pulling up some European stocks yesterday just to kind of just looking at stuff. I'm always looking at stuff. I pulled up this TKA. I was watching one of those like History Channel Nazi videos, and this TKA NY, it's a German company that they used to make submarines and stuff for the Nazis. I think it's called ThyssenKrupp, something like that. Not a very interesting stock. But then I was just looking at German stocks that are listed there, and this is Daimler Trucking, which is kind of interesting stock. FCNCA. All right, this is this, I believe, Canadian bank that just ripped the upside yesterday. If we look at the chart, we can see it's actually just kind of returning to where it the recent highs. If we go to an 180 day, we can see it was up around 800, got down to around 500 in the last since January, and now it's ripped back past 800 up to 9. It got a high of 951. This is another one of these where the options are very illiquid. If you want to play here, be very careful. There's not a lot of liquidity at all. There's not a lot of open interest, and even the stock market is very wide. Look, it's currently $5 wide. Obviously, we're not open for the market yet, but I was watching it trade yesterday during the day, and it was very wide. So this is a real high flyer and mover. I think there's probably opportunity here, but I would test the liquidity, see what you can get in and out of, but there's definitely opportunity in ones like this one, this FCNCA. So it might be an interesting one to check out. Somebody was commenting with this boil/cold that boil is such a low number, it almost needs to reverse split. But there's much more open interest in boil than there is in cold. I think that's because people are more comfortable with a long leverage play on natural gas than they are with a inverse one. I think the public just kind of, I know it's not that much of a complication to have an inverse ETF, but I think the public is more comfortable just getting long things that go up normally, or getting long stuff that's the same as the product that you're working with. Thus, you're trading natural gas, you're betting natural gas is going to go up. You buy a leveraged ETF that makes money when it goes up, as opposed to selling a leveraged ETF that makes money when it goes down, or betting against natural gas that it's going to go down with cold. It seems like more people are on board with the ETF that's in line with the actual product that you're trading, if that makes sense. And definitely this is borne out by the open interest. You can see the open interest here. Also interesting, it looks like boil has different months than cold, right? That might have to do with the splits and whatnot, but you see we have SEP and DECE here. We're trading NOV in cold, so different months, which is kind of interesting. Now there is when you first look at boil and you take a look at the chart, you see, oh, well, this came down from 140 or whatever. You think, oh, well, let me just buy a little, and when it goes back up there, I'll make multiple percentages. Well, that's not the way these things really work, right? This stuff is decaying all the time, and just because this traded 140 back in July, or 120 back in July, 140 back in May, doesn't mean it's ever going to get back there again. So that's kind of deceptive. Just buying a little of this won't necessarily work. It could work, and certainly me being short cold is the equivalent of somebody buying this, except being short cold, the decay is working for me, and buying boil, the decay is working against you. So that's the big difference between the two. And certainly from my place, I'm looking at this an important distinction. Yeah, so I'm going to try to get out of my Squarespace. I made a couple bucks on it the last couple of days. It was saying that my shares hadn't settled yet in the 401k yesterday. That's why I didn't sell it yesterday. But I'm glad I didn't sell it yesterday, because I would have been selling it at 62, and now it's, well, it closed 64.40. It's offered at 64 now. We'll see what happens this morning, but I'm definitely going to get out of that position this morning. Let me come back on the screen here and bid you farewell. We can check the chat briefly. I just kind of started making videos again, and so not that many people are actually around when I make them, and I've been trying to make them at 8:30, but sometimes they're at 9 instead. I do appreciate the people that have come in the chat. I appreciate all you that are watching them, and I'm expecting this to build up again as I come on every day and give you little tidbits of what I'm thinking about for the day. Not the clearest picture either today. Maybe time to invest in a new camera. What do you think? All right. Thanks for watching, and we'll see you in the next one. Bye.